inflation eats your money quietly, relentless every single year. But in Brazil, there's a way to turn that silent threat into an opportunity. Let's talk about how to beat inflation intelligently. In our last video, we looked at Brazil's inflation outlook, projected at 4.8% for 2025, and how the Selic rate, currently around 15%, is the central bank's main tool to control it. But understanding inflation is only the first step. Today, we'll go deeper into how foreign investors can protect their portfolio, even profit from inflation. One of Brazil's most effective tools against inflation is the Tesouro IPCA, also known as inflation-linked government bonds. I'll explain how these bonds work, when they make sense, and how to use them strategically in a diversified portfolio that actually defends your capital. Let's dive in. The Tesouro IPCA, also called MTNB, is one of the most powerful ways to protect your money in Brazil. These are government bonds indexed to inflation, issued directly by the Brazilian Treasury. Here's the idea. Each bond pays a fixed interest rate plus the IPCA, which is Brazil's official inflation index. So if inflation rises, your yield automatically adjusts, preserving your purchasing power. For example, if a bond pays 5% fixed plus 4% inflation, your total return is around 9% per year in real terms. It's a direct and effective hedge. Your investment keeps growing even when prices rise. But here's the catch. The official inflation rate doesn't always match your personal inflation, the actual increase in your cost of living. For example, the IPCA may not capture the full rise in things like school tuition, health insurance, or rent. So IPCA-linked bonds are a great foundation, but they should never be your entire strategy. The smartest approach is balance. Keep a fraction of your portfolio in inflation-linked assets, enough to preserve purchasing power, but combine it with growth assets. Beyond bonds, another strong defense against inflation comes from real assets and equities, investments that tend to rise in value as prices climb. Some Brazilian companies operate in regulated or defensive sectors, like utilities, energy, or consumer staples. And these businesses can pass inflation through their prices, helping maintain profitability in real terms. Think electricity companies, water utilities, or large supermarket chains. Their revenues often rise alongside inflation. Then we have real estate, one of Brazil's most traditional inflation hedges. Whether directly or through fees, Brazilian real estate funds, property gives you two layers of protection. First, rental income usually increases with inflation, since most leases are indexed to IPCA or IGPM. Second, property values themselves often appreciate as overall prices level rise. That's income plus appreciation, a dual hedge. Finally, commodities like oil, gold, or soy are natural inflation hedges. Their prices typically rise when inflation accelerates, especially in a country like Brazil, a major exporter of raw materials. And even holding ETFs or foreign companies in the commodity sector helps protect against both price and currency volatility. So while Tesouro IPCA bonds protect you from official inflation, real assets, equities, real estate, and commodities give your portfolio the flexibility to grow with the economy. Another essential layer of protection, especially for foreigners, is currency diversification. When inflation rises in Brazil, the real often weakens. Keeping part of your wealth in strong currencies like the US dollar or the euro acts as a natural hedge. When the real falls, the local value of your foreign assets rise, helping you preserve global purchasing power. And you can do this through global ETFs, mutual funds, or international investment accounts. Some investors even use cryptocurrencies, but that should stay a small speculative allocation. Always watch for FX cost, taxation, and exchange rate volatility. And if you're a foreign investor in Brazil or a Brazilian investing abroad, make sure both tax systems are properly aligned. The goal is simple. Keep your purchasing power intact while growing in real terms. For more advanced investors, there are hybrid and structured strategies that blend inflation protection, growth, and diversification. Hybrid funds combine inflation-indexed bonds, equities, and foreign exposure, balancing the stability of fixed income with the growth of global assets. Structured notes take it further, linking returns to inflation indices plus a market performance bonus. For example, a note might guarantee IPCA returns plus an extra gain if certain stock indices perform well. And these products are usually offered through private banking or family offices, not regular online brokers. At Padilha Attorneys, we help foreign investors access, structure, and manage these opportunities legally, safely, and across borders. One of the simplest yet most powerful inflation protections is how you withdraw your income. If you withdraw everything your portfolio earns, your capital stops growing while prices keep rising. And let's say your portfolio earns 10% per year and inflation is 4%. If you withdraw only 6% and reinvest the rest, you keep growing in real terms. And that small difference compounds over time, protecting your purchasing power. Let your capital breathe, because the best hedge against inflation is growth that compounds faster than prices rise. Let's visualize it. Imagine your portfolio is split 50% in Brazil, 50% abroad. Now apply inflation at 3%, 5%, and 7% per year. At 3%, you might keep pace. At 5%, your costs rise faster. At 7%, your cost of living almost doubles in 10 years. But with a diversified strategy, bonds, real assets, foreign currencies, and disciplined withdrawals, you can contain that impact and preserve your real wealth. So here's the key takeaway. It's not about chasing returns. It's about preserving purchasing power. And if you're investing in Brazil, make sure your portfolio includes inflation protection, currency diversification, and proper tax alignment. Have you felt inflation impact in Brazil? What did you do to protect your capital? Share your experience in the comments. I would love to hear it. And if you found this helpful, don't miss our next video, Taxation for Foreign Investors and How to Invest in Brazil Step by Step. My name is Carla Padilha, and this is Padilha Attorneys. If you're ready to invest, diversify, or relocate to Brazil, visit p41.com. And don't forget to like, subscribe, and share this video so more investors can make smarter, safer decisions about their wealth in Brazil.